Yeah, hi. Okay, let's do this.
Is everything okay?
Yeah. So I'm gonna share the screen. Screen one. Okay, done. So we were discussing the keystone, right? So let's
Yeah.
attempt keystone. So all you need to do is first thing is check which one is our tax year. So tax year is 30th September X1. Okay, so all the first thing you're gonna do is, are we making what we are making statement of profit and loss
Mhm.
and loss, profit and loss,
Mhm.
30th September, year ended 30th September 2000 X1. First thing you need to do is instead of going to the question and once you read the requirement, then you will have to go back to the question to read it over again, right? It will waste your
Mhm.
time. So first thing is check the requirement first, what you are required, what you need to make.
What do you
So
need to do?
what you need to do,
Yeah.
yeah. So we need to
Yeah.
do is statement of profit and loss
Mhm.
and statement of financial position. So we know when to start and where to start. So we know profit, I wrote it here already, statement of profit and loss for the year, and keystone till the keystone should be the, let me write it here, keystone. So we know it is for keystone. So this will relate the answer, and you can have this as a marking, yeah, that the you can say the working. So I'm gonna make it here. I'm gonna make it here, in fact. So I want you to see the working. So these are all our workings. So either you can, prepare at the last, but I always prepare in the next. This is our main performer. This is gonna be our the
Working with.
working ones. So this one, it is best if you write this dollar, because you're gonna be rounded off. So the examiner will know that these two are in dollars, but in rounded to thousands.
1,000.
Yeah, if
Mhm.
you don't do it, in case you don't do it, then you start writing, suppose you this, but examiner know already that these are not the figure, these are the currency. But specifically, if you mention on the top, it will say in dollars. Or if the question, if you are in pounds, if you have chosen your variant as UK variant, then you can write pounds. So you specifically informing examiner that these are not just numbers. These are not just the figures. These are the currency, or actual amounts. So these are all
Mhm.
small things. So we will get to know anyway. So let's do either you can start working from here, sales, cost of sales, this, or the best way, this is what I do. Instead of going through this, we will do our uh, workings or
Adjustments. Mhm.
adjustments first. So you
Mhm.
can say adjustment one, working W1, you can write whatever you don't want to write. You can, like, some write overdraft, some write cost of sales. So I'm gonna write working one. So definitely we need some adjustments. All these adjustments you can see is related to cost of sales. So we definitely need cost of sales. And once we finalize our cost of sales, we will just pick this figure and place it here. So either you can write this revenue. So whatever. So I'm not writing the amount, but from the question I know we need to
You
have
know that it needs to go
revenues.
in there. Yeah.
Yes. So we need to know the cost of sales. Cost of sales. So we will have to get mine. Then we will have GP, which is gross profit. Gross profit. Then you can see distribution cost is there, admin cost is there, finance cost is there. Either you can write it now, or you can later you can add them in. So let's do the my way, actually, you can say. So let's do the adjustment first. So definitely we need cost of sales. Either you can copy this here. So we need, so you don't know, maybe you need one column or two. So let's read the question first. During the year, Keystone manufactured an item of plant for its own use. So see
Mhm.
this. So the first thing is we got the idea that it is for their own use.
Own use. Yes.
Right. The second
Mhm,
thing is manufactured. They are manufacturing themselves.
mhm, 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 mhm.
So what?
So it's like yeah, manufactured an item of plant for its own use. Okay.
Yes.
Yeah. Yep.
So it
Yep.
means it is self-constructed. It is
Mhm, mhm,
self-constructed.
mhm,
So the all the profit you will make is not about revenues or the cost of you cannot add this into cost of sales. First thing is
mhm,
because this is your cost of sales is direct expenses. So cost of sales is like revenues, and then all the figures you have,
mhm, mhm,
then you can get the gross profit. But this
mhm,
is the self-constructed uh, thing. So these are all the information given as for the self-constructed. So it means this is our cost of sales as our let me see, where is it? Cost of sales, can you see in the question?
um,
Okay, now I'll show you. Material cost, these are all, he says, part of, you can see note one, note one, note one, right? These are all related to note one.
mhm.
So we'll do the note one first, and now we have to generate our cost of
Cost
sales.
of
And
sales.
how
Yes.
we will make it?
Cost of sales
Opening,
isn't that opening,
yeah, and opening
opening,
inventory first. And let me write
opening
opening
inventory
inventory
plus
plus all the expenses.
purchases
So all the purchases, yes, you can say purchases. So we will see
minus
which one
closing.
minus closing, right? Now
Yeah.
we will add all these one by one.
Hmm.
Sorry.
That's okay.
Opening inventory. Let's see where is opening inventory. So see this 30th September 30th is our year end. It means the years must have started on October. So see this information. Where is it?
Hmm.
Um,
Wait, hold on. Wait,
yeah,
what
yeah,
did we look at?
inventory. So this,
Oh, oh, oh,
so this is
oh,
our
yeah.
inventory. Opening
Hmm.
inventory is because this x0, and we are generating our account for x1. So this
Yeah,
means
yeah,
this is our opening.
yeah. Hmm.
46,700 is our opening.
Yeah, and
Okay.
there's no notes on it, so we know we don't need to adjust it, or we have
Yes.
to just be careful.
This is just the easy marking. In always,
Mm,
he will give you the easy marking, easy scores, like finance
mm,
cost. There should not be any adjustment. So we will
mm.
just write finance cost as it is.
Do you get a mark for putting in finance
Yeah,
cost?
yeah, yeah, yeah.
Okay,
Every step
yeah.
will have a mark.
Hmm.
In the exam,
Okay.
in the exam kit, you will see in the
Oh yeah,
answer
you'll
after
see
the
the mark. Yeah.
yeah, you will see all the marking schemes. So we know
Okay.
on inventory, opening inventory, we have done this adjustment. And opening inventory will also adjust in the SOFP, and because we need inventory in
Hmm.
SOFP. We'll see. I'll let you know. So in the next one is, so see this all related. So one by one will go through. So material cost. How much material cost is there? 64,000, right? So I'm gonna
Hmm.
write it here for you. 64,000 from the 64,000 from the
Hmm.
try balance
From the
directly.
trial balance. Yes.
Yes. And he says the direct material and labor were 3 million and 4 million respectively, and
Respectively. Yeah.
TST and production overhead. All these final surprising or markup, all these are close, sorry, all these manufacturing costs incurred are included in the relevant expenses. Okay, and the plant and completed put into the immediate. Okay, so all these he has already included in our cost of sales. All these
Hmm.
material cost is already
Hmm.
included. This 3 million is also included in the
Hmm. Hmm.
material 64. This
Yes.
4 million is also included in our
Yes.
labor cost. So this is
Hmm.
self-generated. So we need to take this off from them. We need to take
Oh, we have to
off.
take it out.
Yes. So we will take it out from them because
Oh,
this is
why? Okay.
so because this is our internally generated. So these are all our
Hmm.
costs, overheads. So we will add separately, but not on this.
Hmm. Hmm.
So we will add, say now we'll see 64,000 minus 3,000.
Hmm.
So is 6,000, 61,000. Same as now production labor. So this is next bit, production labor, production, production labor. Same for production labor. As per the trial balance, we have 124,000 minus 4,000. 4 million, you can say,
Mhm,
see this 4 million. These two adjusted, right? So
mhm,
I'm gonna write it here now. So you can see is equal to 124,000 plus 4, sorry, minus 4,000. So it means 120,000.
mhm, 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 mhm,
Okay, next one is factory overheads. So you see this factory overheads. So it says the production overhead is 75% of the direct labor costs. So direct labor was 4 million, right? You can see this direct labor cost was 4 million, and he's
mhm.
saying that overhead was 75% of 4,000. So you can say this.
Wait,
So
so hold on. It says production
factory
overhead is
overhead.
75% of labor, and labor was 4 million. So
Yes.
do we have to add it or we have to take it
No,
out
take
as
it
well?
out. We all need to take these in out. So it means, so you can see 80,000 from the trial balance
Hmm.
minus this and 75% of 4 million into 75%.
Mm. But hold on, it says production overheads are 75%.
Percent of direct labor cost, and labor cost was 4 million. See this.
Yeah, so production overheads. So that's not production labor. We're not taking it off.
Yeah, we need to take this off because only cost of sales is the direct expenses. So direct expenses mean which is
Yeah.
related to sales, and
To
this,
sales. Oh
yeah, so
yes,
this
because
is
it's cost of
self-construction.
sales.
Yeah, this
Yeah,
is
yeah, yeah,
our
yeah.
self-constructed plant. This is not the board. This is not the sale or purchase. We have no
Hmm.
purchase it. We are manufacturing it. So that is why all the direct labor costs we
Hmm.
mistakenly added. We need to take them away from it.
Okay, I understand. But
So
okay,
now
cool. I just want to
save
read
this.
this bit again. Hold on.
Yeah, yeah,
So
go on.
it says production overheads are 75% of direct labor. So direct labor costs are are 4 million there. But the only thing is that you see that production labor,
Hmm.
how come we didn't take it from production labor? You know the one
Which
in
one?
cell G, so you see this production overhead is 75% of direct labor. Yeah.
We are taking it out. See this.
Yeah, yeah, yeah. But how come we took it out of factory overheads and not production labor? Because it's production overheads.
Same. He's just the name of overheads. Either you say factory overheads or either you say production overhead, because we specifically there is no production overhead. So it's only factory overheads given in the exam in this
Okay,
question.
fine.
So we can
Okay, fine.
consider, we can assume it's same.
Okay, fine.
So it means, so see this
Hmm.
is equal to
Hmm.
80,000. So I did this already. 4,000 into 75% is 3,000, right? So
Hmm.
80,000 minus 3,000 is our factory overheads.
Hmm. Okay, cool. So I get so material 64, which is given,
Yeah.
minus 3,000,
Yes.
which is the 3 million.
Yes.
Yes. And then the
And
4 million is taken from
yes.
the labor, and then the last overheads. Yes, okay, I understand.
Hmm.
Okay, fine.
Okay,
Okay,
this bit
cool.
is done already. Next one is, so
Yeah.
this says Keystone determine the final selling price for the goods by adding markup on the whatever, so 40% of the cost and including the relevant expenses in the trial balance. Okay, the plant was converted into this. So we'll this one will take later. Let's go to the next one because we need to
Mhm.
adjust. There are more entries to come in the cost of sales. It's not finalized yet. So let's see. All
These are
plant and
still part of the opening inventory, all
which
of
one?
that. Yeah.
Yeah, yeah, yeah.
All of
I'll
that
show
that
you.
you've,
I'll show you.
yeah. Yeah.
Next one
Okay.
is all plant and equipment is depreciated at 20% reducing balance method with the time approachment in
Hmm.
the year of the acquisition. Okay.
Hmm.
The next bit is, let me see, the director decided to revalue the property in line with the increase in the value. Okay. So all the plant and equipment is depreciated over its useful, where is it? Over
Over
20%. Okay.
20%. Yeah.
Which one is
So
it?
that's
All
reducing
plant and
maintenance.
equipment. So we'll see plant and
Yeah.
equipment. Plant and
Yeah.
equipment is here, right?
Yes.
So
Yes.
the plant and equipment will be depreciation of plant,
But it
Depreciation
did.
of
Wait, hold on. But it didn't say where it went. So do we assume it goes into cost of sales?
no, no, I'll show you.
Okay.
Oh yeah, yeah, yeah. Because usually it goes in cost of sales. All the depreciation goes to cost of sales, and
Oh, okay.
amortization. And in all the AF F7 question, you'll see
Mm-hmm.
it's given in the cost of sales. Either you can deduct in, the separate line here, or
Mm-hmm.
you
Mm-hmm.
can add in cost of sales. But most of the time, it will be added in the cost of sale. Both
Okay.
is fine. If you add it in the separate line, that's fine. But as long as depreciation has calculated correctly, as long as it's correct, that's it. So depreciation, we need to calculate depreciation, right? Let's see. We have information we have given 14 million. This trial balance figure is, we don't need it in for profit and loss, we need it for depreciation. That depreciation will come on the cost of sales, and this figure will go in the fine profit and loss. This is, you know already, right? This is for this SOFP. This is closing balance goes to
Yeah.
SOFP, but we only need the depreciation out of it. And it says all
Yeah. Yeah.
plant and equipment is depreciated over 20
Yeah. So that's
20%.
for that's for the SFOP, and then also to know
Oh,
what
oh,
the
sorry, sorry, sorry.
what the
I get you.
carrying value.
Yeah, no, no, no. I see this. So this is our carrying value. So, oh yeah, I
Yeah.
noticed.
Yeah. Yeah.
This is
Yeah.
our
Yeah.
carrying value, and this is our accumulated
Depreciation to
depreciation. Yes,
depreciation
this
till
is
then.
separate
So then you
depreciation.
so
So
then
we will,
now you'll know what you're gonna use to
yes.
depreciate
So
the 20%.
44,500. Take this
Yeah.
44,500. This is for SOFP.
Minus.
Yeah, minus
Yeah.
14,500. This is
Mm-hmm.
accumulated one. And
Mm-hmm.
on this, we will take 20% for this year, right?
Mm-hmm.
So this is the way we will do it. So 44,500 minus 14,500 is this, and take 20% on this. So our depreciation is 6,000.
6,000.
Yes. So
Mm-hmm.
6,000 is our depreciation. So we can write 6,000 here. Let me see. Okay. Okay. Let me see if I any adjustment need to do. Okay.
Mm-hmm.
Next bit is all the depreciation. This is done already, right? So
Yeah.
we
Yeah.
can highlight.
Wait, is that on both of them? But is that on both of them? If we go up, if you
No,
scroll up,
it's no, see,
because isn't it?
the
Yeah.
next one is property, not plant. So plant
Okay.
and
Yeah.
equipment. So this is plant and equipment.
Okay.
So
So
that
we
this
leave
one is
property.
property. This is not plant and equipment. So
Yeah.
this
Yeah.
property
Okay.
will be
Fine.
with the straight line.
Later
So
on.
you can see
Yeah.
this. The next adjustment is for the property. So it says
Mm-hmm.
director decided to revalue the property in line with the recent increase in market. Okay, 1st July X1,
Mm-hmm.
independent surveyor valued. Okay, so we need another adjustment. So leave those lines because there are few bits
Mm-hmm.
and bobs coming in. So we'll
Mm-hmm.
see. We can do this. Either you can be in this formula, or you can take this all in working number 2 and take
Two,
only 6,000 here. So
and
you
only
know,
leave the
yeah,
6,000. Yeah.
yeah. So this is our main
I think that makes it look neater.
yeah, this will look neater. That's why we're gonna do this
Yeah.
way.
Yeah.
So working 2 is this. We have taken
Mm-hmm.
this amount already. Working 2. Now working 3. Working 3, we can write regarding property. Property. So property was 50,000. Property at cost is 50,000. Okay. So we're gonna write 50,000. Our as per the trial balance. This one 50,000. Right. Then we'll see any yeah, see accumulated. So always minus accumulated depreciation less accumulated
Depreciation. Yes.
depreciation is minus 10,000.
Mm-hmm.
So it means the carrying value is
40,000.
40,000. And now the
Yeah.
question, go to the adjustment. It says independent survey came at the beginning of the year. So you have to, depreciate after incremental depreciation. I will show you.
Mm-hmm.
Then make sure you note the date. So they on
Mm-hmm.
1st October, first day of the year, we called
Mm-hmm.
the surveyor and the property was revalued to 48 million. So this is
Yes.
our 48 million
So that's our new
value
thing. So then that means
valued.
we have a
At,
really we have a
yeah,
we have a a valuation increase of 8,000.
Yes, 8,000 was revalued.
Yeah. 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 Yeah.
8,000
Yeah.
revalued.
Yeah.
We revalued by 8,000.
Hmm. Yes.
Gain on revaluation, and let's see, property was being amortized over useful life. So working for, you can write here, working for, let me write working for, which is amortization on revalued property. So revalued property, we'll see 40. So now the depreciation will be on 48 million,
Yes, because
48,000,
it,
right?
and that's
Yeah,
because it happened at the beginning of the year.
yes. And it was how many life? It was 20 years life. Original life was 20 years, it says.
Hmm.
Original
Hmm.
life. So it means how we can figure out how many years has already been gone.
Oh, we have to wait.
Yeah,
Hold on.
we
Wait.
when
Wait.
you
Wait. Wait.
calculate.
Wait. 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 Hold
Yeah.
on. I know. So it says the directors accepted the property has been amortized over the original life of 40 years. So how much was the property? So 40. So I mean over 20. So you have to do 50,000 divided by 20,
Yes.
and then you
This is
have to
per year.
then, yeah, that's per year. And then if you've got,
Nope.
no, 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 no.
It's
If you've
mean,
got,
say this.
yes,
four
yeah, so
years
it's
have
four
been passed.
years.
That's why you will see property depreciation till date is 10,000. So it
Yeah,
means
yeah,
this is per year. And
yeah,
if you multiply by 4, it means 4 years
yeah.
has already been gone.
But does that now mean that we have to, does it, so is it, and it's saying that it's now 16 then? You have to
16,
divide it by the
yes.
16.
So 3 million is our
Yeah.
amortization. This will go here. So is equal to this,
Hmm.
and then you can drag it here. So it's easy for us.
Hmm.
So this bit is done already.
Hmm.
Next one is next, let's see, next line. This one has already, we have done with this, all of this.
Hmm. Hmm.
Keystone does not make a transfer to retainer of excess of the amortization. Okay, done. So it means we are not transferring it to retained earning. So
Oh,
we
wait,
you
wait,
remember
we're not,
we are not.
yeah.
You remember when we sell it, then we will transfer it, but not now. We're gonna keep it. But it says
Hmm.
revaluation gain will create a deferred liability. It means we need to give tax on the revalued on this amount.
Hmm. Hmm.
We
Hmm.
still need to pay tax. So how much tax we need to pay? So let's see how
What's the
much is
tax
the
rate?
tax
But the
rate.
tax rate will be, no, it'll be at the bottom. I think they'll tell you in
See,
another
this
bit.
income tax rate is
It's
30%.
30%.
So we
Yeah.
need to take 30% on this.
Yeah.
So this is deferred tax on revaluation
By the way,
gain.
can I ask you, yeah,
Yeah.
if you see if the examiner sees that some of your workings are correct, yeah, can he
Mhm.
give you mark for your workings or no?
Yeah. Even if you know that cost of sales is minus, but there are some, suppose you have calculated this wrong, you have calculated this wrong, but you did calculate this right, this right, this right, this right, and you have done the whole formula, you wrote it in here, you will get mark for these three, and putting all the cost of sale on this main performer, you will still get marks. But the wrong calculation, you will not get full marks for the wrong calculation. Suppose these two were wrong, the rest was okay, so you will not gonna get these 2 marks, but you will still score 1 2 3 4 4, and putting
Mhm.
everything on main performer here,
Okay,
you
fine.
can still
Yeah.
score these.
Okay, yeah.
So you just want to see if you know good, better. So if you know, if you have divided this by 16, you will still get mark.
Mhm.
But if you divide it by 15, so it means now you're still gonna get the mark, half mark, or maybe a less, because you know
Mhm.
how to calculate, but you calculated wrong. So it means
Mhm.
you know how to calculate, so you will score the mark. But because you were unable to calculate 16, it means you will gonna lose the half a mark, because you did not know how much remaining life is it.
Life, yeah.
Yeah, so
Mhm.
but to score full marks, if you write this, you will score full mark.
Okay.
Okay, next bit
Okay.
is
That's great. Yeah.
all the depreciation amortization is charged to, it says definitely is examiners told already
Mhm.
specifically. So in this question, you cannot write these two in the separate line. You cannot write it here. So it has to be inside the
The
cost of
cost of
sale
sales. Because it
because
told
it,
you.
yeah, it
And then
told you
if you didn't,
specifically.
would you still get the mark or you wouldn't?
No, then you don't. If you did not write in the cost of sale, but you calculated it
Mhm.
correctly, you will still half score half mark. But
Okay. Yeah.
specifically told you to add in the cost of sale. But if you don't, then you will
Mm,
gonna lose the mark. But you still
yes.
can score it because you correctly, calculated correctly.
Okay. Yeah.
Um, no depreciation or amortization has charged by. Okay, no depreciation or amortization has yet been
Charged
charged or
on. Yeah. Yeah.
non-current
So it's
assets
telling
for
you
the
you
year.
have to do it.
Yes, we have to do
Yeah.
it, this one.
Mhm.
So it means what uh, any non-current asset means the self-constructed one. So the one we are making it. The self-construction will be a depreciation. Did we start manufacturing? Let me see. When did we start? The direct cost of this final selling price is this. The cost incurred
Wait, but you
included.
see those. You see those. But you see, like, hold on. During the year, manufacturers a plant. Yeah. So do we have to depreciate the 3 million and the 4 million, or
Let
no?
me see. Yeah, this is what let me see. Just hang on.
Okay. Sure.
Let me see which one. I'm just reading the question. Yeah, yep. So you'll see which one is it. So see this 3 million, 4 million. See 3 million, 4 million to 75% of the labor cost, which is for. So let me see. I'll write it here. Working five.
Oh.
Self-constructed plant.
Oh, so we have to
Yeah.
do it.
So 3
Yeah.
million for the labor. Well, sorry, 3
Mm.
million for the material
Yeah.
plus 4 million for the
Labor.
labor
Yeah.
plus 75% of the direct labor production overheads. So production overhead was 3000 production overheads.
Where did you get the production overheads from?
See, 75% of the labor cost. If you take for 75% of 4000, you will get 3000. So production overhead 3000. See this line.
Okay. Okay.
75%
Okay.
of the direct labor cost. So it means
Okay.
the
Fine.
total
Fine.
value
Fine.
of your plant is 3000
Yeah.
plus
3,000 plus
4000
3.
plus
So it's about 10.
3000. 10. So
10
this is
million.
your 10 million.
Yes.
And it is for when it is started. The plant
Mm.
completed up to use from 1st April.
Was
So
put
it means
into
it will
immediate
be
use.
ready. It will be ready from 1st April. So from first when
Yes.
it is start, we're gonna start using it. Then only we will start depreciating it, right?
Depreciating it.
So it means
Oh
April
yeah.
till 30th
April to
September.
to the so that's
Yes,
4 minus
the
12, which
depreciation
is what, 8, 9. So it's
is
9.
from April to 30th
This
September.
yeah,
This
yeah,
one.
yeah, yeah.
So you can
That bit
see.
is tricky, you know. You know,
Yeah,
I don't think I would get that bit, you know,
yeah, but
if I was in an exam.
yeah, no, I true, but I told you already that this. You have to be very focused when reading the questions. Okay,
Hmm.
so every line is important, you can say. So we'll see April, May, June, July, August, September, 6 months. So 10 million, and it doesn't say reducing balance or straight
Wait.
line.
To September. Why September? Oh yeah, September is the year end.
Yeah, year
Yeah,
end is
sorry.
30th
I thought
September.
December would it.
Yeah,
Yeah.
divided by um, it's just 6 months. It's just for 6 months. So we'll just write 10 million into wait, where is it?
Times half. It's half. No, six is it 6/12?
6/12. Let's see. Oh, I
Half.
need to
So
this.
5 million. That's a big depreciation, you know.
Yeah, this. Let me see. Oh, come on. 5,000. Let me see if any life is given in the exam. all plant and equipment is depreciated over the portion. Okay, see this line. So you can assume this also applies in our plant because we are making in plant, right? The examiner told us already all plant and equipment is depreciated over 20%, reducing balance. Uh, a method with the time apportioned in the year. So you give us, a hint. This because we did the time apportion, right? So this is we will consider this as we need to take 20% of this on this. So take 20% on this. So take so it means 10,000 multiplied by so multiplied by 6 divided by 12 into 20%. So 1,000 is our depreciation. So this is we have already depreciated our plant here, right? And 1,000 is coming from this. So it means we have to add here. So it means you can write it here, depreciation, and write it here. Working 5, working 5. You can write it here as well like this. Self-constructed W5 self-constructed plant depreciation 1,000. Where it is coming from? Here, 1,000. Now you can add this.
Wait, what's this book? What's this book for? This
This.
depreciation. But why the
Oh,
20%?
so 20% is given in the question. See this, 20% reducing balance.
Oh yeah, because
So all plant here, all plant
so you have to
equipment.
be very careful
Yes. So 6
because we
month,
was gonna do straight
20%.
line
Yes.
method.
So 6,000 coming from the depreciation of other plant plus 1,000 from our plant. So it means total depreciation is 7,000. Here we will write 7,000.
Mm,
This bit is done. So it means this minus this will be the carrying value of constructed plant 9,000 for SOFP. This will go to SOFP. Next bit is let's do the next bit.
Okay, cool. Oh wait, I need to read it. Okay, cool. So wait, so the total, if you just go up a bit, so the total depreciation is that 1,000 times is 1,000 plus the 6,000.
Yeah, this one. So it means 6,000 from other plant, this one, plus 1,000 from here. So it means 7,000. We need to adjust 7,000. So we did the almost, yeah, we have done the first adjustment.
Okay.
Okay, next one is, let's see, is there anything else? So let's see the closing inventory. Can we find any closing inventory? Is there any closing inventory? Because I wanted to finalize this
Yeah, I'm
cost
looking
of
at it as
sales.
well. Man, train
Okay, no,
payables.
let's see.
No.
Maybe we'll just have to calculate manually. Let's read the requirements. Is there any closing inventory here? See this inventory.
Mhm.
Inventory at 30th September. This is our 30th September is our year end. So
Is our
56 point.
closing.
So this is our
Hmm.
closing. Closing inventory is it's in minus anyway 56,600.
Hmm.
So if you is equal to sum, oh come on, is equal to sum bracket open
Hmm.
this.
Opening plus purchases. So we didn't need to worry about purchases today
No,
on this
no,
one.
it's all these are all our you can say purchases.
Purchases.
But
Okay, yeah.
it did not give us separate purchases. If you would have given us the purchases, then we
Hmm.
would add. But now it's just this. So this
Okay,
line,
fine.
make it underline. So this is our bit. So this is
Hmm.
our final cost of sales figure. So let me see. Okay, so we can add it here now. So
Mhm,
revenues 377. This is easy marking. So all you need to do is just write it here. Here, um,
mhm,
377 600. This one is coming from this 258,000, or this is in minus. Oops. This is our gross profit. So this
mhm.
bit is done already. Now we can easily score our easy marks. Um, Let me see which one is easy mark. Distribution cost. We can write distribution cost. Distribution cost, which is minus, where is our distribution cost? To 14,200. Simple. Then we have administrative expenses. Administrative expenses. And
But it's
you can see there is
it
a
has a
note
note.
too.
Yeah,
So
yeah.
you can't write directly because there must be some adjustment. Go to your note
Mhm,
two and come on this
mhm.
working six is our, where is it? Our working six is related to admin expense. Okay, right. On 1st August, okay, 1st August X1, which is within our year end. So this has to be incorporated because this falls
Into
within this year.
yes.
Yeah. So it says admin expenses. Let me
Mhm,
see, where is it? So it says on 1st August, a key share price stood at this. Okay, why they are giving us share price? That's the issue. Read next. On this date, Keystone paid a dividend. Oh, okay, they paid a dividend, but this included in the admin expenses.
mhm.
When we um, issue dividend, where usually it goes?
Um, um, if you think if you're gonna issue a
Dividend.
thing, then I think it will come out of your like retained earnings.
Yes, from retained earning, and it has to be reported on a statement of other comprehensive
Finance.
income,
So,
but no on the profit and loss. So
oh,
it means he
yeah,
mistakenly added this
yeah.
into the admin expenses. So we
You
need
know,
to
also,
make, yeah,
you see, when you got statement of profit and loss, and you got OCI, but OCI is just underneath it, right? But they make it like two different things.
yeah. So I'll show you
Okay,
this. So working
yeah.
six is admin expenses as per the trial balance. Or we have as per the trial balance is, where is it?
Mm-hmm,
Admin expenses 46,000. Oops. As per the trial balance, this is our 46,400 is our expense. And now we have to minus the dividend. First, we need to take how much dividend. So dividend,
mm-hmm, mm-hmm.
dividend paid. How much we
But
paid?
to know where it says Kenny's share price stood at this on this day paid a dividend that is calculated given a dividend yield of 4%.
Yes, I will show you. We'll go one
Yeah.
by one. So
Okay.
see this. Where is it? Our equity share, 20 cent each. So total, this is the amount. Always see, this is the amount. It means 50,000 is, we cannot consider 50,000 as shares. It means 50,000 is the amount and each share was 20 cents.
Yes.
So how much it will be, like number of shares? We can calculate number of shares here. So this
Mhm,
will give us number of shares.
mhm. So give us about what was that 50,000 divided
50,000
by
divided
20.
by
So
20. So these are the
it's a
number of
lot of
shares.
shares, you know.
Yeah, lot of shares.
Yeah.
And he's saying each share is priced 2.4.
Yeah.
So share price is equal to this multiplied by 2.4 is our share
Mm,
price, and we paid 4% dividend yield. It means we paid 4% on each share,
mhm.
on total shares for 4%. It means 24,000 we paid.
Oh, yeah, can you go up again? So, yeah, so we paid. So that amount times, wait,
So
what you see?
this
Yeah,
minus this. So it means we have to, he told
yeah,
me that it was included in the admin cost, but we need to take this out of the admin cost. So
yes.
admin
Wait.
expenses should be
You see
this.
that 24,000, how did we calculate it again?
See this number of shares is equal to
Yes,
number of shares multiplied
yes.
by each share was 2.4.
Oh, and then it has a dividend yield of 4%.
Yes, into 4%.
Okay, yeah, yeah,
24,000. So
yeah. Hold
24,000.
on one
It means
second.
so
Yeah, I told you I called her. She's still at the place. At which place? Margate. At the mad. That's what I just told you downstairs. You said, "Oh yeah." No, I mean at the mad. It's late. Oh, okay. Yes, ma'am. What's his name? Sharon. Okay, fine. No problem. I'll check up on her. Hello.
yep. Now you see this. Now this is our final figure, admin expenses, which is
Mhm.
22,400. Now we can take this here is equal to minus, link this. Okay, this bit is done. Next line is, where is the easy marks? Finance cost. No adjustment. Just write finance cost here. So this one will be finance cost is minus 350,000.
Mhm.
Oh no, you just have to write 350 because we are already rounding off. And easy mark is investment income. So we must have got some income. So this is our income. 300 is our income. So add
800,
investment income.
800, 800.
Is it 800? Yeah, sorry, 800. I
Yeah,
thought it's 3.
yeah.
Done. Next one is, yeah, this is our fine. Now we can is equal to sum. This is what I'll do. We have
You
done,
have to copy and paste and
see this.
no,
So I'm just writing out, underlining this because this is our gross profit. So
yeah.
from here we can, from here we can do the sum formula. So I was,
Oh, okay.
so sum is equal to this, and this is our 83,
N-
350 is our profit
Net
before
profit
profit before
before tax.
tax.
Okay.
So we'll do the tax here, tax
hmm
expense for the year.
hmm Isn't the tax expense? Oh, no,
Yeah,
no,
the
no. We need
expense
to
for
know.
this. We will
But
take see this deferred tax. We will calculate deferred tax and everything. So
yeah.
tax, and after this we will have profit after tax. We will get
hmm
profit after tax, and the remaining we'll see. Now we'll see jump
Okay.
on this. Do you see any tax amount?
No.
We only have deferred tax.
Deferred tax. Yeah,
Okay,
but
and
sometimes we see taxation sometimes, right?
yeah, but it doesn't have the tax. Let me see, go on the, so
Yeah.
tax adjustment number 4. So adjustment number 4 is this. So a
Mm,
provision for the tax is 30th September. So it means the provision for this tax year is 24,300. So we'll see
mhm.
24,300. It's still missing, but there must be more figures in coming in,
Mm,
and is required. Okay, the tax base of the net asset. Remember I showed you tax base. If the tax base is less or higher than the carrying value, remember I gave you the rules. Do you still remember it or no?
Wait, say that again,
If
sorry.
the tax base is higher, remember
Yeah, if the tax
deductible,
base,
taxable,
yeah.
or
Yeah. If the tax, you have, you have to calculate both sides. So you have to calculate it depreciated and then the tax base,
yep. Now I'm gonna show you.
and then there'll be a temporary difference.
Yes, so working 7 tax, deferred tax, you can say
Mhm.
tax ones. So I'll show you. Just hang on, let me see. So tax base of the net assets was 15 million, less than their carrying amount. Okay, so I'm gonna write first thing is 15 million.
Mm.
Okay, tax base. We're gonna write tax base is 15 million, which is 15,000, and less than the carrying amount, and then included the effect of the revaluation lease property. Okay, this is a one bit I need to show you. Remember we got the gain, and we'll see here revaluation gain will create a deferred liability. This one is done. I'll show you this. So it says, remember we have done here somewhere revaluation. See this deferred tax on the revaluation gain.
Mhm.
Can you see this?
Yes.
So they remember it was revalued and we took the deferred tax. So we take this one out. First thing is deferred tax on revaluation, because this was already been revaluation gain was 24,000, 2,400. Okay, this one is done. Increase requirement. Okay, now we'll see 15 million is the tax base. So just hang on, I can see. Is there not provision? Is there any provision? Because usually you give us a provision. Provision. Can you see any provision? Let me see if I can
Mm-mm.
find any provision. Just let me write down. Let me see if I can find any provision. Strange. The provision of the income tax is 24,300, which I already wrote. And 1st October. There must be here. 1st October property is there. Retained earning is there. See, just hang on. The production is this, markup is this, are required. Oh, yeah. It's given here. So deferred tax is 2,700. So see this. As per the trial balance, deferred tax as per trial balance is 2,700, which is in 2,700. Okay, let me see this. And this is tax base is 15 million, and we need to take this. And let me see if how much is it coming. This plus this is 25,300. Oh, tax base. Oh, yeah. So this is our tax base. Just hang on, my wife messed me. So tax base, we multiply this with our tax base multiplied with our tax rate. Then only we will get the tax deferred tax liability or deferred tax asset. So this is 15 million, 15,000, and 8,000 is here for revaluation gain into 30%, because we still need to this one is coming 6,900. Now you'll see this is over increase. This means this is 15,000, which is from this adjustment. 15 million is from this adjustment, plus 8 million from the revaluation. It means this has to be increased. So this is our provision plus trial balance is in minus. See, you can see it is in credit side. So we minus this deferred tax. So it means for this year we have to generate 4,000. We need actually 4,200, 4,200. But from 4,200 we allocated 24,000. This one for to the revaluation gain. So it means the remaining will go to the profit and loss. The remaining will go to profit and loss. We'll charge this to profit and loss. Profit and loss. Did you get it? So this is 15 million as per the trial balance. I'll show you again. This is our, where is it? 15 million is from the trial balance plus 8,000 from the revaluation, and we take this 30% because the tax rate is 30%. And the credit side, see this deferred tax is on the credit side, so we minus this. So it means if you take these two difference, it means for this year you need 4,200, but from 4,200 we allocated 2,400 to revaluation gain. The remaining will go to profit and loss. This is your last final tax figure. So this will be your tax figure. So you can, this is the actual amount you pay tax.
Okay.
Tax expense is how much you are paying tax. You need to pay tax 1,800. You need to pay tax as 1,800. So 1,800 and plus provision for this year provision. So as it is estimated that 2,400 from this trial balance, it is estimated that this year provision is this. So to 1,800 from the last year, because last year tax we will pay this year, and along with the this year estimation. So this 24 million is this year estimation plus 1,800. So this will go 2,400, 24,300 into 1,800. This will be your tax. $26,100 will be your tax amount. Oh, come on, I wrongly mistakenly wrote it here. It should go here because this is after tax. This is after tax. Yep. If you do this is equal to this plus this. So this is your figure, profit after tax. Up to here, your profit and loss statement has been completed. And then you can write, this is going to be your profit after tax or profit for the year. And if because in the question he says other comprehensive income. Other comprehensive income is too easy to make. So you can write other comprehensive income, comprehensive income. You can write it here. So 57,250 already there. And in there you will get revaluation. Only one bit is there, revaluation gain, which was 8,000. And you paid the tax already on this. Deferred tax you paid on this. Deferred tax was
We have to put
2,400.
that there.
Yeah.
Do we have to do we have to include the OCI?
Yeah. It means the net figure is for this, because this is coming from the this with this. So this is your other as per the other comprehensive income. That's it. Other comprehensive income. This bit is done. So now we can make keystone balance statement of financial position. You can say a statement of financial position as at, because it's always as at September 30th 2000x1, and do this. Click here and general numbers. Where is it? make it currency, I guess. Currency. Yeah. Boysley in pounds. Let me say, I'll show you this way. Write it here. You can see it's always in commas and it looks good then. So you can reduce your, see this. So you see this format. Presentation is done. Now all need to do is just quite easy now to make assets and liabilities and equity side. First one is assets. So it's going to be like non-asset sides, asset, NCA, non-current asset. In a non-current asset, what we have? So come on this, we were having, so this is our depreciation, easy. So we can easily calculate, let me show you. See this property, this after this, where is it? Where is it? We have done somewhere or no? No, but we'll do it now. So lease property, this is our property. 50,000 was the price, and depreciation, this is a revaluation, and this is the after the revaluation. And you can say how much we have lease property. Let me write it here for SOFP. SOFP, the carrying amount. We just need to know the carrying amount. So the lease property was 40. How much is it? 48,000. See this 48,000 because by the end year it was revalued at 48,000, right?
Yes, 48,000.
Yeah,
Yes, but we
48,000 property, and the plant
okay,
and
yeah.
plant and equipment was, where is it? Plant and equipment, our plant. So see this. Where did we make our self-constructed plant? Where I wrote self-constructed plant.
It's self-constructed plant is around six, or was that the depreciation? No,
This was our depreciation.
no, it's lower. It's lower.
45,000. Let me write it here. Let me see how much it is coming. 44,500 minus 14,500 minus 6,000 is 24,000. Yeah, is coming. See this, right? Did you get it? How I calculated is equal to 44,500. You can say here
Mm-hmm.
from here. 44,500. You can see this.
Mm-hmm.
44,500 was total. 44,500 minus up
Mm-hmm.
to the date how much we have depreciated. 14,500 we have already depreciated up this was given in the trial balance, and how much we are we charge 6,000 more. So it means the carrying amount is 24,000 for plant, the self-constructed one. Oh, no, the bought one, the already we were already having it. Now the self-constructed one, constructed, how much was it? 10,000, right? See this
Mm-hmm.
self-constructed. I wrote some self-constructed. See this. So the carrying value I already wrote it here. Self-constructed, you can see 10,000 was the total. 1,000 were
Mm-hmm.
depreciated and
Minus the
9,000
depreciation,
is there.
there's
So
9,000.
9,000 is our dep. 9,000
Mm-hmm.
is our self-constructed one. What else
Mm-hmm.
is missing? What else is there? This is pretty much it is. Yes, and one more thing. So this 48,000, where is it? It was 48,000, right?
Mm-hmm.
8,000 was revalued. 8,000 was revalued,
Mm-hmm.
and it the uh,
Oh, at
eight
what date?
48,000 was revalued, uh, and we need to take 48,000. I'll show you 48,000. 48,000 divided by 16, 3,000. So 3,000 will need to take this away from
Oh,
48,000.
Yeah.
depreciation for this year.
Mhm,
So the
mhm.
total is, how much is this coming? 78,000 years. So this is our working and working 7, 8, I think 8. Yeah, working number 8. This is our carrying value. Take this here, non-current asset, total assets is equal to
Mhm.
this. There you go. So non-current assets, working number 8, done. This is done. Next one is, let's see, next trade receivable, just easy mark wrote. Non-current is current assets, is current assets. In current assets is trade receivable. How much it is? 27,800.
Mhm.
This bit is done, so I can highlight this. Bank, easy marks. And inventory. Inventory, remember opening, closing, and it we need to take closing inventory here. Closing inventory, you can say this, you see this 56,600 over closing inventory. So closing inventory is our current assets. Let me see how much it is coming here. So pretty much it is 164,000. Let me divide one. So let me see is equal to sum this, done. Next one, let me see if any other needs to be attached. Okay, done. Next bit is our equity. So this is our total assets.
Mhm.
Total assets, bold. Now liability and equity, liability, equity and liability. Equity and liability. Now we will make equity first. Equity side, always shares, ordinary shares.
Mhm.
We will write ordinary shares, and we know 50,000 was the amount, but number of shares we know divided by, right? So we write
Mhm.
here directly. Is what given in the exam. Where is
We
it?
were at 50
See this
shares.
50,000. 50,000 is
Yeah.
our,
Mhm.
so 50,000 our share, ordinary shares, and revaluation gain or revaluation surplus. How much was it? After deducting the, where is it? I'll show you. We must have done, where is 8,000? See this is our 5,600. This is SOFP, revaluation gain surplus, because I'll
Yeah.
show you. So this 8,000 was surplus. Remember, 8,000 was revalued.
Mhm.
40,000 then revalued were 48,000, and we paid tax. It means if you take this, so this will be reported like we, after tax we still have 5,600. This is our surplus. So this is our surplus. This value is coming from, where is it? This. So this is our surplus. Revaluation surplus done. Then we have retained earning. Retained earnings. So as per the trial balance, you can say 15,600 from the trial balance plus. Remember, I'll show you. There is a tricky point. So 15,600 from the trial balance plus
Mhm.
for the this year profit was 57,250 for this year profit, plus do not write it this one. Do not write this one because revaluation gain. and I have already calculated revaluation gain here. You can see. That's why I'm taking this amount. If you take this amount, it means you are duplicating your revaluation gain. That's why I wrote 5,700, 5,600 separately. So take retained earning for this year is 57,250. Can you see my cursor? Yeah, 57,250 is our retained earning profit for the year. So this year profit will go to retained earning.
It has to go to return. Yeah,
Yes,
yeah.
but remember minus. Remember we missed. We always give dividend from the retained earning, which will be taken out from the cost of sales. We have taken out from cost of sales. So
We have to take it out
24,000.
from there.
Yes,
Yeah.
because we pay dividend from retained earning. So we
Mm-hmm.
take this 24,000 away from the dividend. So if you want, I can show you 24,000. I wrote somewhere when we calculated dividend. See this 24,000 dividend. So this dividend needs to be take out because dividend always we give the dividend from the retained earning. So you can see retained earning this 15,600 from the trial balance, this 57,250 coming from this year profit plus minus the dividend. So it means 15,600 plus 57,250 minus 24,000. So this is your retained earning 48,850. Done. Now non-current liabilities. What liabilities we got?
Oh, so we did
First one is
NCA. No,
sorry.
no, I'm just thinking to myself. It's okay.
Okay. No worries, I'll show you.
Yeah.
Deferred tax liability.
Mm-hmm.
First one is see this. This our liability which is not being settled this year, but it's gonna be in the next year. So this as per the trial balance. So 6,900 will be our deferred tax liability. Deferred tax liability is 6,900. Simple now. Current liabilities. Current liabilities. Let me find out current liabilities. Let me see if it is given. Says trade payables 27,800 trade payables. So this is our tax current liabilities. In current liabilities we have trade payables. So payables is our creditors. So creditors is 27,800. And okay, bank is in credit. The bank is in credit side. So it
So
means
what does that mean? Is it overdraft?
overdraft. Yep. Bank is in credit. It means it is overdraft.
Mm-hmm.
So it's overdraft is our liability. So 2,300. But if it is in the credit debit side, oh yeah, mistakenly I wrote here. So this should go off. It's not.
Mm-hmm.
They should go off. This is not our because I wrote. I thought it's our bank.
Because
I just
usually the
wrote bank
bank is in. So
debit side.
if the bank is credit, it's overdrawn.
Yeah,
Yeah. Okay.
that's why I didn't write it here. By
Mm,
mistake, and he wrote on the other side. First,
it's
okay.
okay.
Next one is the current tax payable. So tax payable is 24,300. Let me show you current tax. I'll show you deferred tax liability. Where is it? So this year we pay tax, right? Then this is our provision for this year. So it means this year. Oh, come on. Where is it? Yeah. So this year we paid 2,400 to 2,024.3 million. So this is our tax
What?
liability,
What?
current
Oh,
liability,
oh, oh,
tax payable or tax payable, you can say. For this year, it is estimated 300.
oh. Mm,
That's pretty much it is, I guess. So let me see. Hopefully, it should 164,000 is coming. How much it is coming now? Total liabilities is equal to sum Done. So this over you can calculate this way. This numbers percentage. Take this out. This and this. Let me see what is the difference amount. So we got 162 400 minus 165 750 3,550. Let me see which one I missed. Trade receivables. Oh, I mistakenly wrote 27,800 receivable. It is okay. Trade payable. I mistakenly wrote trade payable as it should be 31,500. This is our 31,150. Yeah, now matched. So it's 165,000 is our asset. 165,000 is our liabilities. That's it.
You're a top man.
Oh, first attempt matched
True.
because I loved the final account over. I practiced so much. So I'm gonna send you this spreadsheet anyway.
Okay, cool. Yeah.
So this
I
way
need.
you can easily copy all the. Even if you make suppose definitely you're gonna make a mistake on the
Yeah.
deferred tax, but you can still score the other marks. You can see
Yeah.
if
Yeah.
you
Yeah.
present
Yeah.
this way, you should be fine. This is our liability assets. Yeah, pretty much. So tomorrow we'll do the one or two consolidated accounts.
Yeah, and then we'll do more of the thing as well. One or two more of the
Yeah,
thing.
yeah, no worries, no worries.
If that's okay. And then yeah, man.
Yep, no worries, mate. I'm gonna send you this. And I made a YouTube account.
Yeah.
And
Oh, well done. That's why I saw you recording it. That's why.
yeah, I recorded it, so I will post the same videos onto the YouTube.
Oh, that's smart, man. And
And
then
I
you
have
know.
uploaded other lectures as well, the our old ones. So I'm gonna upload those one as well. So you can
Okay,
revise
nice.
the whole thing again.
Okay, cool.
Let me
All right, then,
see
cool.
where can I. Oh, is it not recording?
Well, I remember you said that it was
No, it is
recording.
recording. You are
It is
screen
recording.
sharing. I think it's recording. Yeah,
Mm.
no worries. No worries. Thanks, mate. I will upload this. And I'll
Okay,
give you the
cool.
link, my YouTube channel link, so you can even revise the whole, the one we have just
The
done it.
host.
You can revise the whole thing again.
Okay, brilliant.
No worries. Thank you, mate.
Okay.
Cheers.
Okay, I'll see you tomorrow.
See you, mate. Bye.
All right, bye.